Hey everyone, in this video I'm going to compare two artificial intelligence AI stocks and determine which one I think is the better AI stock to buy for 2024 and beyond. The two AI stocks I'm going to compare in this video are Palantir Technologies and Upstart Holdings, and I'm going to compare these two on a number of critical financial metrics including valuation to determine which one I think is the better stock to buy. So let's jump right in.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, what I have here is the revenue for Palantir and Upstart. But before we get into the revenue for these two, let's look at the total addressable market for artificial intelligence. According to Statista, the total addressable market for artificial intelligence is expected to grow to $1.85 trillion by the year 2030. That would be up significantly from the $207.9 billion in 2023. Artificial intelligence is popularized by large language models like ChatGPT, but there are more applications like driverless car technology, recommender systems, and more. The companies that stand to benefit from the growth in this AI surge is companies like Amazon, Nvidia, Alphabet, Microsoft, and more. Investors getting in today could realize exponential returns from investments that capitalize on the growing effectiveness of artificial intelligence. That being said, now you realize how massive the market opportunity is for these AI stocks. And already, Palantir has done a great job of capitalizing on that market. Remember, Palantir offers enterprises and institutions AI solutions to improve their operations. Its revenue increased to 2.12 billion in the most recent trailing 12 months. That was up from around 800 million in 2020. Upstart Holdings, meanwhile, uses artificial intelligence to make lending decisions. It claims that those decisions based on AI are going to perform better than legacy models using your traditional credit score. Now, it's too early to tell if its claims are true that AI is indeed more effective in determining lending decisions. But if it's right, man, could this be a big opportunity for Upstart? The company experienced a brief decline in revenue in late 2022 as lenders feared an oncoming recession. And you know, when a recession is oncoming, people might lose their jobs. And if they lose their jobs, they might not pay back their loans. And that's why lenders pulled back on the Upstart platform and revenue decreased after it had risen nicely. It fell back down to 515 million in the trailing 12 months. Upstart stock investors are hoping that with the decrease in interest rates and the fears of a recession receding, that 2024 will be a better year for Upstart in lending. Let's actually look at analyst estimates for Upstart. So analysts expect Upstart's revenue to grow from 506 million all the way up to 658 million in 2024. That increase in revenue is going to turn Upstart profitable again. It had achieved profitability before its downturn. Analysts expect 14 cents per share earnings for Upstart in 2024, and they expect that to continue in 2025 with revenue of 821 million and earnings per share to triple to 42 cents. So the prospects are excellent for Upstart over the next couple of years. Meanwhile, for Palantir, analysts expect its revenue to grow to 2.66 billion in 2024 and earnings per share to rise by a nickel to 30 cents from 25 cents. And again in 2025, they expect growth to reach 3.2 billion in revenue and earnings per share of 35 cents. Now, while Palantir's earnings per share and revenue growth is not expected to grow at the same rate as Upstart, you might understand because Palantir is already at a larger scale and it's already profitable. And you can see the chart of net income going back a few years. In the orange, Upstart was more profitable to begin with, and then things turned around, and now Palantir is the more profitable company with 147 million in net income over the trailing 12 months compared to a 253 million loss for Upstart. But again, analysts expect this to turn around in 2024. So there are optimistic expectations for Upstart already in 2024. I also wanted to consider the average diluted shares outstanding. The number of shares outstanding is an important financial metric. If a company issues more stock because it is running out of money or it wants to invest in a new growth project, it has the potential to decrease your earnings per share. Look up here, when I have a net income of 1,000 and shares outstanding of 100, my earnings per share is 10. You take the net income divided by shares outstanding and you get 10. But now let's say you increase your shares outstanding to 200 and you have the same net income of 1,000. Now your earnings per share is just 5. The same is true in the opposite direction. If a company is losing money on the bottom line and it issues more shares, it spreads out the losses across more shares, thereby reducing the loss per share, which is a tricky way to reduce the loss per share. Look at this point here. A net loss of 1,000 with 100 shares outstanding creates a loss per share of 10. But if you take that same net loss of 1,000 and you spread it across more shares, 200 shares, you now have a net loss per share of just 5. So it's a tricky accounting trick to get your losses reduced on earnings per share. So you want to take a closer look to see where the improvement in the loss per share is coming from. That being said, you can see both are diluting shareholders, but Palantir more so. Palantir's average shares outstanding increased from 2 billion up to 2.32 billion from January until December or September. And then Upstart increased from about 81.5 million to about 84.4 million. So Palantir is diluting shareholders more significantly. Now, if we compared their balance sheet, looking at cash and short-term investments and comparing it to long-term debt, Palantir has a pristine balance sheet with 3.28 billion in cash and short-term investments with zero debt, while Upstart has 1 billion in long-term debt and 525 million in cash and short-term investments. So Palantir, clearly the significantly better balance sheet between these two AI stocks. And finally, I want to compare these two on valuation, and the metric I chose to use is the forward price to sales ratio. And using this metric, and according to this metric, Palantir is way more expensive, trading at a forward price to sales of 13.57 compared to Upstart with the forward price to sales of 4.999. Now, this was a close decision. This was a difficult decision because Upstart's prospects over the next 2 years are really strong. Earnings per share to turn positive and then triple in 2025. And the less than half of the valuation to Palantir made a compelling case. However, if I had to choose one of these two AI stocks to buy today, I would pick Palantir. It's already proven growth in revenue and profitability combined with the pristine balance sheet and the leading position in its industry allows me to say that I would rather pay this premium price for Palantir stock over Upstart, even though Upstart does have excellent prospects ahead. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.